Welcome to Financial News and Review for Thursday, June 6, 2024, your go-to source for concise summaries of the top financial interview shows. We cut through the noise to bring you the key highlights, saving you valuable time each day. In this video, we will be providing important takeaways and insights for the following videos. From Adam Taggart, Thoughtful Money. We have Brent Johnson. The demise of the dollar will take longer and more surprising turns than many expect. From Kitco News, we have Bitcoin to top 125K by year-end. Only 5% institutional money is in. Get off the dollar, Belshe. From Kitco News, we have Bank of Canada cuts rate, Indian stock market rebounds, and Ray Dalio's global risk warning, Kitco News. From Blockworks Macro, we have the U.S. job market is weakening for real this time. Perret-Green. From David Lynn, we have Donald Trump. I will never allow creation of CBDC. What this means for election? James Seyffart. From David Lynn, we have Fed pivot imminent. Why central banks are cutting rates now? Cameron Dawson. From the Julia Roche show, we have they're going to print so much money, it's going to shock you. James Lavish. Summary of Brent Johnson. The demise of the dollar will take longer and more surprising turns than many expect. In this interview, Adam Taggart of Thoughtful Money hosts Brent Johnson, who discusses the sustainability and future trajectory of the U.S. dollar, famously known for his dollar milkshake theory. Johnson offers an in-depth analysis on the topic, suggesting varied and nuanced turns for the dollar than many anticipate. The core thesis of the interview is that the collapse of the U.S. dollar is inevitable, but will take longer and involve more surprising twists than expected. Brent Johnson argues that while the dollar will strengthen relative to other fiat currencies, it may not hold its purchasing power against real assets. He supports this with thoughtful commentary and evidence, examining the structural and geopolitical factors at play. Key points discussed by Brent Johnson include 1. Dollar milkshake theory. Johnson explains his dollar milkshake theory, which focuses on a sovereign debt and currency crisis driven by the global need for U.S. dollars. He details its foundational principles and how predictions from the theory are borne out in market behaviors. 2. Market and timing observations. Johnson admits his initial timing for a dollar crisis was premature. He thought the crisis would occur in the next 3 to 5 years, starting from 2018. Despite timing errors, the theory's framework helps understand market dynamics and why global investors gravitate towards U.S. assets. 3. Current dynamics and future outlook. He observes the existing market scenario where long-term interest rates are rising and predicts an impending sovereign debt crisis. Johnson outlines that the relative strength of the dollar will continue, drawing capital to the U.S. despite higher interest rates and other global currencies faltering. Key predictions made by Brent Johnson. 1. U.S. dollar strength. He anticipates the dollar will get stronger compared to other fiat currencies due to global debt structures, but warns that it might not retain its purchasing power over real assets. 2. Sovereign debt and currency crisis. Johnson predicts a series of interconnected crises rather than a single event, leading to a transition from the current to a new monetary system, potentially accompanied by economic and military conflicts. Conclusion. Johnson wraps up by emphasizing the need for investors to diversify rather than going all in on a singular bet against or for the dollar. He promotes a conservative approach, advocating for having insurance in place and being adaptable to changing market conditions. He underscores the importance of being ruthlessly objective and separating personal biases from investment decisions to navigate the prospective turbulent economic landscape. Summary of Bitcoin to top 125K by year-end. Only 5% institutional money is in. Get off the dollar. Belshe. Video title. Bitcoin to top 125K by year-end. Only 5% institutional money is in. Get off the dollar. Channel name, Kitco News. Guest name, Mike Belshe, CEO of BitGo. In this interview, Kitco News hosts Mike Belshe, who discusses the future of Bitcoin and its potential market dynamics, providing insightful commentary and evidence. Core thesis. Mike Belshe argues that Bitcoin will reach a price of $125 to $135 by the year-end, driven by various factors including institutional investments and macroeconomic conditions. His central message emphasizes the declining value of the U.S. dollar and the rising prominence of Bitcoin. Key points discussed by Mike Belshe. 1. Institutional demand for Bitcoin. Insight. Despite initial ETF approvals, institutional adoption has been slow but is beginning to pick up. Evidence. Early ETF purchases have been predominantly retail, with institutional investors taking longer due to complex decision-making processes. Example, the pension funds and large corporate treasuries are now starting to show interest. 2. Macroeconomic influences. Insight. The macroeconomic climate, including uncontrollable U.S. debt and inflation, supports Bitcoin's thesis as a hedge. Evidence. Government debt and foreign policy decisions increase the attractiveness of Bitcoin as a reserve asset. Quote, "Your dollar is going down, my dollar is going down, get off the dollar." 3. Political and regulatory environment. Insight. Political dynamics have impacted the approval of Bitcoin and Ethereum ETFs. Evidence. The unexpected approval of the Bitcoin ETF and potential approvals for Ethereum suggest political influence. Example, the shift from a negative to a more favorable stance on crypto assets by various administrations. Corporate adoption. Insight. More corporations are likely to diversify their treasuries into Bitcoin. Evidence. Companies like MicroStrategy have already made significant investments. Comparison with retail investors who are recommended to allocate 3 to 5% of their portfolios to Bitcoin by financial experts. Key predictions by Mike Belshe. 1. Bitcoin price prediction. Detail, Bitcoin to reach 125 to 135 KEL by end of 2024. Implications, driven by institutional and broader economic factors. 2. Ethereum ETF approval. Detail, spot Ethereum ETFs will likely be approved, potentially by Q4 2024. Implications, approval timelines might extend beyond initial expectations due to regulatory processes. 3. Regulatory environment. Detail, predicts a more favorable regulatory climate for digital assets in the U.S. Implications, this could correlate with the political party in power and their stance on digital assets. In conclusion, Mike Belshe emphasizes the strategic importance of Bitcoin in the current economic climate, urging viewers to consider it as a hedge against dollar devaluation. The fundamental takeaway is the idea of moving away from the US dollar towards digital assets like Bitcoin. He envisions a near future where decentralization gains prominence and the regulatory environment in the US becomes more crypto-friendly, thus fostering innovation and stability in the digital asset space. Summary of Bank of Canada cuts rate, Indian stock market rebounds, and Ray Dalio's global risk warning, Kitco News. In this interview, Kitco News hosts a segment presented by Jeremy Safran that delves into several critical economic developments. The main topics discussed include the Bank of Canada's interest rate cut, the recovery of the Indian stock market, and billionaire investor Ray Dalio's warning about global economic risks. The core thesis of the interview is that recent economic measures and geopolitical events are significantly shaping global financial landscapes. Jeremy Safran argues that the interplay between these factors creates a complex environment for growth and stability, supported by thoughtful commentary and evidence. Key points discussed by Jeremy Safran include: 1. Bank of Canada's interest rate cut. Jeremy Safran elaborates on the Bank of Canada's decision to reduce its key interest rate to 4.75%, marking the first cut in over 4 years. This move aims to stimulate economic growth as inflation shows signs of cooling. Specific examples include Governor Tiff Macklem's emphasis on the need for sustained improvement before considering further cuts. Number 2. European Central Bank's upcoming meeting. The discussion also covers the European Central Bank's scheduled meeting on June 6th, where expectations of a rate cut exist despite rising inflation. This highlights the broader challenge faced by central banks worldwide in balancing economic growth and inflation control. 3. Indian stock market rebound. Additionally, Jeremy Safran reports on the rebound of the Indian stock market following political stability. With an alliance partner of Prime Minister Modi's party affirming support to form a coalition government, the Nifty 50 index surged over 2%, recovering from recent significant losses. Jeremy Safran also makes several key predictions, such as 1. Future rate cuts in Canada. The potential for further interest rate cuts by the Bank of Canada depending on incoming economic data and inflation trends. 2. Global economic risks. Ray Dalio's prediction about increasing risks to the global economy due to high levels of debt, internal conflicts in developed countries, and potential economic sanctions between major powers like the United States and China. In conclusion, Jeremy Safran summarizes his insights by emphasizing the importance of monitoring these developments and their potential implications on global financial stability. He encourages viewers to stay informed and highlights the need for vigilance amidst economic uncertainties. In essence, the video provides a comprehensive analysis of current economic trends and expert forecasts, stressing the significance of understanding these dynamics to navigate the evolving financial landscape. Staff summary of the U.S. job market is weakening, for real this time, Perret-Green. In this interview, the YouTube channel Blockworks Macro hosts Perret-Green, who discusses the weakening U.S. job market, providing in-depth insights and analysis. The core thesis of the interview is that the U.S. job market is experiencing significant deterioration. Perret-Green argues that the narrative of a robust job market is flawed, supported by a detailed examination of economic indicators and labor market statistics. Key points discussed by Perret-Green. 1. Conflicting economic forces. Patrick mentions that the current economic landscape is influenced by numerous conflicting forces, citing strong U.S. economic performance, rising yields in Japanese bonds, and deflationary pressures in China. He acknowledges the difficulty in forming a coherent narrative due to these diverse factors. 2. Chinese deflation and global impact. A significant focus is on China's deflationary impact, driven by their ongoing property bust and weak domestic demand. Patrick elaborates on how China's producer prices influence global inflation trends and commodity prices, particularly copper and iron ore. 3. U.S. consumer behavior and debt. Discusses the weakening U.S. consumer behavior with rising delinquencies and reduced borrowing capacity. Cites the decrease in household loan deposit ratios and the slowing growth of consumer borrowing, highlighting the potential for reduced consumption and economic slowdown. 4. Labor market data reliability raises concerns about the reliability of U.S. labor market data, including employment numbers and job openings, questioning the strength of the employment market. Notes the disproportionate creation of low-paying jobs compared to high-paying jobs. 5. Central bank policies. Critiques past central bank policies, suggesting that they've been overly influenced by outdated inflation forecasts leading to over-tightening. Predicts that central banks might adopt a more dovish stance if labor market conditions show unexpected weakness. Key predictions by Perret-Green. 1. Global economic slowdown. Predicts a global economic slowdown driven by weak Chinese demand and rising consumer caution in other parts of the world. Anticipates that U.S. consumer spending growth will soften significantly. Moderation in U.S. inflation. Asserts that inflation pressures will moderate in the U.S. due to lower commodity prices and reduced consumer spending. Believes that central bank policies might pivot from tightening to easing in response to deflationary pressures. 3. Impact on financial markets. Suggests that financial markets, particularly equities, might face headwinds due to weakening global demand. Foresees potential corrections in asset prices if central banks ease monetary policies or if Chinese economic conditions deteriorate further. Conclusion. Perret-Green summarizes his insights by emphasizing the need for caution in interpreting labor market and economic data. He encourages viewers to maintain a critical perspective on prevailing economic narratives and to be prepared for a potential pivot by central banks. He underscores the importance of understanding the broader global economic context and its impact on local markets, highlighting the interconnectedness of global economic forces. In essence, the interview paints a complex picture of the current economic landscape, urging a skeptical and forward-looking approach to economic and market analysis. Disclaimer: the summary above is extracted and synthesized based on the provided transcript. Some interpretations and extrapolations were made to create a coherent narrative of the interview's key points and themes. Summary of Donald Trump: I will never allow creation of CBDC. What this means for election James Seyffart. In this interview, David Lynn hosts James Seyffart, a research analyst at Bloomberg Intelligence, to discuss the implications of Donald Trump's recent stance against central bank digital currencies, CBDCs, and its potential impact on the upcoming U.S. elections. They also explore the current state and future of cryptocurrency regulations, focusing on recent developments like the approval of Ethereum ETFs. The core thesis of the interview is the evolving political landscape around cryptocurrency could significantly impact market dynamics and voter behavior in the forthcoming elections. James Seyffart argues that Trump's shift to a pro-crypto stance is largely transactional, aiming to attract single-issue voters who support digital assets. This is supported by his strong statements against CBDCs and his promise to protect Bitcoin from regulatory overreach. Key points discussed by James Seyffart include: 1. Trump's shift on crypto. Seyffart elaborates on Trump's recent speech where he promised to oppose CBDCs and support self-custody of Bitcoin. He suggests this shift is politically motivated to attract pro-crypto voters. Trump's previous Treasury Secretary, Steven Mnuchin, was not a fan of cryptocurrencies, indicating a significant change in Trump's current approach. 2. Biden administration's stance. They also discussed the Biden administration's mixed messages on crypto regulations, such as approving the Ethereum ETFs, but maintaining restrictive rules like SAB 121, which limits banks' ability to custody digital assets. Seyffart mentions that Biden's administration has vetoed attempts to repeal SAB 121, emphasizing the complexity and political nature of current crypto regulations. 3. Regulatory environment for cryptocurrencies. Seyffart covers the implications of recent regulatory changes and their impact on the market, providing examples like the Ethereum ETF's approval. He points out that while some regulations seem to protect traditional financial markets from the risks of digital assets, they also stifle innovation in the sector. Key predictions made by James Seyffart include: 1. Potential for congressional action on CBDCs. Seyffart predicts that there may be legislative attempts to prevent the Federal Reserve from implementing a CBDC, though he is skeptical about their success. 2. Impact on midterm elections. He forecasts that cryptocurrency will become a notable election issue, influencing voter behavior, especially among younger demographics who are more invested in digital assets. In conclusion, James Seyffart summarizes that Trump's pivot to a pro-crypto stance is likely strategic, aiming to exploit the current administration's complex and sometimes contradictory regulatory policies to attract voters. He urges viewers to stay informed about the evolving regulatory landscape and emphasizes the importance of understanding the broader implications of these political maneuvers on the cryptocurrency market. The title of the video is Donald Trump: I will never allow creation of CBDC. What this means for election, James Seyffart. The YouTube channel is David Lynn. This interview provides a comprehensive look at how political shifts and regulatory changes around cryptocurrencies could shape market dynamics and voter behaviors as the U.S. moves closer to elections. Summary of "They're going to print so much money, it's going to shock you, James Lavish." In this interview, the Julia LaRoche Show hosts James Lavish, who discusses the economic outlook, focusing particularly on fiscal policy, inflation, and the potential for significant government money printing. The core thesis of the interview is that due to the overwhelming U.S. government deficit and the fiscal dominance, the government will eventually resort to massive money printing. James Lavish argues that this will lead to significant inflation, supported by detailed economic insights and historical precedents. Key points discussed by James Lavish include: 1. Government deficit and spending. Lavish elaborates on the U.S. government's substantial deficit, highlighting that mandatory expenses alone, such as Social Security, Medicare, and defense spending, are projected to far exceed revenue from taxes. This deficit is compounded by discretionary spending, leading to a deficit of over $2 trillion. He provides specific examples and statistics to illustrate his argument. 2. Fiscal dominance and inflation. Lavish discusses the concept of fiscal dominance, where government spending outpaces the Federal Reserve's monetary policy efforts. Despite measures like raising interest rates and quantitative tightening, inflation remains persistent due to continuous government spending. 3. Economic data manipulation. Lavish covers the manipulation of economic statistics, particularly the Consumer Price Index (CPI). He explains how changes in the basket of goods measured and the substitution of items affect the reported inflation rate, making it appear lower than the reality experienced by consumers. 4. Debt spiral concerns. He provides a detailed explanation of how the current fiscal policies lead to a debt spiral, where increasing deficits necessitate more borrowing, raising the interest expense and further exacerbating fiscal challenges. This cycle makes it inevitable that the government will print more money to cover these deficits. Number 5. Market implications and predictions. Prediction 1. Lavish predicts that to avoid a recession and collapse in confidence, the government will resort to printing large amounts of money, which will significantly inflate the money supply and reduce the dollar's purchasing power. Prediction 2. He foresees that the Federal Reserve will need to back off from quantitative tightening and potentially initiate measures like buying more assets to ensure market liquidity and stability, especially in the Treasury market. In conclusion, James Lavish summarizes his insights by emphasizing the critical need for individuals to protect themselves from long-term structural inflation by investing in hard assets. He advises holding assets like gold, silver, Bitcoin, and real estate rather than relying on cash or long-term bonds. Lavish urges viewers to be aware of the economic realities and to take proactive steps to safeguard their financial well-being in a volatile economic environment. Listeners are encouraged to stay informed, question the reported economic data, and consider how government fiscal policies might impact their personal finances and investment strategies. Thanks for watching Financial News and Review for Thursday, June 6, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.